Hello and welcome to this Diwali special episode, The Big Picture CIO Calculus. And you don't have to look at the faces to figure out that we've got all that matters in terms of the DI activity out here in the studios to tell us what the next 12 months are going to look like.
They manage all your money, now find out how they plan to manage the markets this Samvat.
Oh yes indeed. And let's start off, they need no introduction. The three bigwigs in the studios, thank you so much gentlemen for joining in. Sunil, the immediate concern that the market would have, or the immediate point of the market's mind is that after this verdict that has been given by Bihar, the Grand Alliance scraping through, would that mean that the reforms process could stall and therefore, or come to a bit of a pause, and therefore, would it actually have an impact on the markets?
So obviously the markets would have loved the verdict going the other way around. But having said that, I think very clearly, we are in a scenario where, state politics is important in the near term. But ultimately, we all know that the reform process, which has been stated very clearly, is on its way. We have had major reforms on the power sector. We have had a lot of impetus being given to roads and all, which are now getting fructified in terms of actual implementation. So I think, yes, it will be a very near-term impediment, but overall we remain as confident about the economy going forward.
Naren, how concerned is the market now that BJP hasn't really come into power in Bihar? Could that really stall the reform process? Because GST definitely is big from a market's perspective.
I think if you see the slow derating of the market, if you see the one-year return, the markets have not delivered any returns. And in fact, if you look at the economy-sensitive sectors, most of them have delivered negative returns in the last 1 year. So I think the expectations which were there in 2014 of very quick policy action, we have now realized that Indian politics is not just about Lok Sabha alone. And consequently, I believe that we have slowly reconciled to it. And that's why the market hasn't delivered returns in the last 1 year.
Could that change though, Navneet? The question is, when the government came in, there's a bit of a spike in all of those sectors as well. Since then, they have cooled off, as Naren rightly said as well. Could there be a change over the course of the next 12 to 24 months, despite whatever may happen on the political front?
I don't think so. In state elections, there are a lot of factors at play. There are a lot of dynamics. Apart from the economic ones, there are a lot of other political and social dynamics at play. I don't think one should look at this result and then start thinking about how the markets will behave over the next 1 year. I'm sure the next couple of days, this news will get digested and markets will move on looking at the global economy, domestic economy and the corporate profitability going forward.
Global economy now gets me to the next question, Sunil. We've already seen a spike build up in the US Treasury yields and back home as well. Clearly an indicator that the market is pricing in a Fed rate hike and a lift off as soon as December. Is that going to be a big event for Indian markets? Could it really sort of tumble the pie for us?
See, actually, Ayesha, if you see the history of what is happening globally and how we are trying to sort of factor in, time and again we have had concerns. We had the fiscal cliff, the QE tapering and so on and so forth. And every time those concerns, come, they haunt us for a few months, a few weeks, and then, it just becomes a non-event. Same thing happened in September. Everyone was factoring in a rate hike and there were concerns, and then nothing happened in the market, then again started to take its normal course. So these kind of events, take unnecessarily time and energy in the near term. But ultimately, our direction is very clear. Where if the rates are 0%, they ultimately have to move up. And to that extent, market is factoring in. Now, we don't see a scenario where the interest rates are going to be like increased 10 times in the next 6 months. A 25 basis point increase. That also we are not very sure whether it will happen or not. Is more or less. I think everyone knows that it is going to ultimately happen.
So it's not going to be a late Halloween for us?
Definitely not. I think we'll have a better Christmas, in fact. And looking at India, our trajectory is very clear. We have already had 125 basis point rate cut, and maybe in the next 1 year we might have a 50 to 75 basis point more cut. So irrespective of what US does, I think the trend in India is very clear.
Sunil's answered something that we are planning to ask him in this later on in the show as well. But just coming to that point that we were making, Navneet, we were just having that chat before the show started, and you were talking about how this Samvat to next Samvat, because of a Fed action or even otherwise, we could well see a bit of a bottoming happening in global commodity prices as well.
So maybe I think after the rate hike in US, most likely in December, probably that will signal, it's just like the QE tapering, buy on rumor, sell on news. So once the rate hike is done, maybe we may see some of the markets changing their trajectory. So maybe the dollar peaks around that time, maybe the commodities bottom around that time, and maybe we see the equities probably are doing well, though the market has been concerned about the rate hike, but I think probably that will also show a vote of confidence in the economy by the US Fed. And the history of last 20 years has been that we actually have been positively correlated with the US rates. So the years where the US rates have moved up, I think Nifty has also done well, because I think there are a lot of sectors, a lot of companies which actually get directly benefited from what's happening in the US economy.
Okay.
Naren, no fear of an outflow, inflow, etc. You think fund flows would be as is?
See, I think clearly if you look at what's happened in the world in the last 1 year, you have to identify the most important indicator. I would say it's current account deficit. So if you see all the countries with high current account deficit, whether it is Brazil, whether it's Turkey, whether it's South Africa, those are the countries which were very volatile. And if you see countries with low current account deficit or current account surplus like Taiwan, South Korea, India, etc., the impact is not so significant. So I would say that on the eve of the possible rate hike in December, we have a very comfortable current account deficit. So I expect India to be comfortable and not volatile.
So this Samvat to next Samvat, Naren, you believe we could be higher than where we are right now for the benchmark index?
Clearly we would be higher, but the view is whether you're going to get mega returns or not. I think for the mega returns to come, you need to solve the infrastructure problem, which the government is actively working towards. You have to ensure that the level of real estate under construction and the money stuck there comes down, and the ease of doing business happens. I think all these three will take more than a year maybe to play out. But once these three happen, you'll have a sizable bull market. If these don't happen, you'll get marginal bull markets.
On that note, we're going to take a very quick break. When we come back, we'll figure out exactly that. If indeed it's going to be a bull market, which sectors will do well, come back, and we're going to be in conversation with our three experts.
Well, back with this Diwali special show, CIO Calculus in conversation with three wise men. And Naren, we got your answer on the big picture or what could happen to the markets over the next 12 months. Now my question is about whether the bottom line, the earnings, can actually support any kind of market move. Q2 was or has been a bit of a washout, more disappointing than positive. How do you think the next few quarters shape up to be like?
See, our view is that earnings, you can't wait for earnings. I think earnings will come after the market goes up substantially. Then, you think about it, if some of the commodity prices shoot up, your earnings is going to come. And is it good for oil at 110 or oil at 50? So I think this focus on earnings is not something that should be there, because I think it's going to be a lagging indicator. I think what's important is the economy turning around. Are you seeing a pickup, let's say, in cement demand, in steel demand, in two-wheeler demand? Are you seeing more of real estate getting sold? I think these are the factors one should focus on. I think earnings will be a lagging indicator, and I believe that investors should invest ahead of the earnings going up. As we have seen, people made the best money by investing ahead of election. They made the best money before RBI cut rates, and I believe that investors have to invest in equity before earnings pick up.
So Navneet, is that now the time to invest into banks when everything seems to be in doldrums? I mean, it was really spooky and scary the way BOB came out with its numbers, and one can easily paint the entire banking and financial space with the same brush.
So you have to be selective. Overall financials, we have been more positive on the private sector banks and the quality NBFCs. But of course, I think some of the PSU banks, I think the governance reforms can change the picture over the next couple of years.
So you're still playing safe?
Mostly the private sector banks and NBFCs, but one or two large public sector banks, I think probably who have invested in technology, and I think some of the governance reforms can go a long way in improving the overall performance going forward. But by and large, I think as you see the cyclical recovery taking momentum, I'm quite confident that over the next couple of quarters, probably we are going to see a revival in the investment cycle. The urban consumption seems to be reviving. I think with all those things, some of the cyclicals should do well going forward.
Sunil, let me just ask you, do you drive a Volkswagen or an Audi? You don't, okay. Which is a relief, but...
Jaguar?
No, just because VW has these issues, but my question was broadly around that space as well. The last few months, there has been a bit of a change in autos. Suddenly, an odd TVS comes up and says that, hey, I'm the growth driver for two-wheelers, even though I'm a smaller player. There's a variance between what a Maruti does, what a Tata Motors does. M&M has its issues, and RE is in the sweet spot as well. There's a lot of things happening in auto. What's your view on the other rate sensitive? We discussed banks. What about autos?
So as you said, autos obviously the sort of the leaders are changing, and what we are seeing is that the customers want new models, and the customers want something new, and I think that is what basically is happening. So companies who are able to launch newer products, fresher products, are seeing that spurt in demand, and then obviously based on your quality and based on your service, that demand continues. Another interesting phenomena, obviously, till September was that four-wheelers were doing better than two-wheelers, which is a reflection of urban consumption being slightly higher than rural consumption. October has been slightly different, but it's like a festive month, so you can't make out whether this trend is for real or not.
Right.
But yes, autos present a good opportunity. You have the tailwind of interest rates coming down. You have tailwind of lower costs. And in some segments, specifically four-wheelers, you also have a tailwind of a very low base. So I think it's an interesting segment.
Right.
Naren, when does this big reversal in commodities really come? I mean, do we need to worry about a crude reversal, or for that matter, metals reversal? And if that were to happen, how do you approach commodities, cyclicals, etc. back home?
See, our view is that, no one could predict this move from 110 to 50 or 40. So why do you think we'll correctly predict this move upward?
Well, if you can't, who else would?
So I think we believe, it's slowly, when things are down, like if you see the entire metal space or oil and gas space, most of them are today trading at multi-year lows. So you get an opportunity to buy cheap. When the cycle will improve is a very difficult thing to predict, because I think the Chinese super cycle is over. And you can have a cycle improvement, but I don't think it's going to be on the back of a Chinese super cycle any longer.
So you do buy cheap, right?
So you do buy cheap, but you can't expect a super cycle. I think that part of it is over. Having said that, you can't have a situation where India has the lowest per capita consumption in every metal, and India needs to modernize, it needs to expand. So I think, a lot of demand has to come internally. And today, if you see domestic metal consumption or domestic cement consumption, these have been very low. So I think these areas have to improve, and therefore India may be at the vanguard of this improvement rather than China, which is today a very fully constructed country.
Well, touch wood, for a lot of people who are value investors, maybe they are hoping that this happens sooner rather than later. But the other side of the market, Sunil, and that is the exporters. A bit of a sketchy performance the last 9 to 12 months. So this somewhat, you can argue that they have still done well, but we've seen those speed breakers coming in as well. What's your thought? Let's say hypothetically on IT, what are your thoughts?
So again, the world is growing quite slowly compared to what we had seen in the past. US is growing at 2.5–3%. Europe is barely growing. China has never been a big export destination for India, but because there is pressure on the domestic economy, a lot of Chinese goods produced are slowly shifting to the export side. And you also have a phenomena where currency movements are very, very sharp.
Yes.
So Naren had mentioned, in the earlier part that Brazil, Turkey, and so on and so forth are facing pressure, and that has led to their currencies coming down significantly. I think Indian rupee has been one of the most resilient. So to some extent, the competitiveness is becoming a little bit tricky for Indian corporates. But having said that, I think in this kind of a scenario, exporters like IT have done reasonably well. Then there are some other sectors like chemicals, textiles, who have done phenomenally well. And I think in India, those sectors which were small are suddenly now seeing that companies are of larger size, and they are able to really compete, both in terms of innovating, in terms of newer products, and also in terms of cost. So we do believe that export as a segment has a lot of advantages as far as India is concerned, specifically when China is facing cost pressures in terms of salaries and all. So I think that is continuing to be a decent sector as we move forward.
And that's an apt point as well, right? Chemicals are virtually emerging as the leaders. It's almost like IT business moved from west to east. It's happening in chemicals as well. But Navneet, just very quick thoughts as well. We discussed IT, we've discussed commodities. The sector which we haven't spoken about till now, pharma. A quick view out here. Each company to its own, of course, but still, what's
But
the
the
larger
big
picture?
clamp down by the US FDA.
That continues.
So over the last couple of years, there have been lots of tailwinds. You had not only the volume growth, but the pricing power in US generics. You also had like lots of approvals for several companies over the last couple of years. Growth in rest of the world, in some of the other emerging markets, even the Indian formulations market. I think probably most of that good news might be built into the stock price. Having said that, there are lots of individual companies that we like because of, I think, a lot of approvals in the pipeline. But I think we live in a growth-starved, yield-hungry world. Wherever there is a predictability, visibility of cash flow that commands a huge premium, when the growth gets more dispersed, I think that valuation premium is likely to shrink wherever that is.
Okay, let's take a very, very quick break on that note. Up next, we try and figure out what are the dark horses that the gentlemen have in mind and try and play a bit of a rapid fire with all our three experts.
Back with the big picture, the CIO calculus. Still in conversation with our three wise men, and let's take cognizance of what the year ahead is going to look like in our favorite, the rapid fire round. And without thinking, you have to come up with an answer, whatever comes to the top of your mind. So I'm going to start with Naren first. When will the economy turn around? First half of next calendar or second half?
Second half.
Navneet, will we see more Royal Enfields being sold or more Shikakais being sold?
Royal Enfield.
Okay, so urban economy.
Urban economy it is. So how many more and what quantum of rate cuts in the next year?
50 basis points.
Naren, who will,
Each? 50 basis points
No,
each?
total.
Total 50
Total
basis
50
points.
I'm talking about from now to the next calendar.
Yes.
yeah, this Samvat to next Samvat. Naren, who will make those rate cuts though? Will it be RG or will there be a new GUV?
We don't have an answer.
You don't care.
Playing safe. That's playing safe.
Okay, pass. So how much of a rate hike by the Fed? The quantum?
50 bips by next year.
Okay, and Sunil, Donald Trump or Hillary Clinton next year?
I don't care a damn, frankly.
How about if you were to
I
make a
hope the
guess?
markets also
Hillary
react.
Clinton.
Okay. Will India win the T20 World Cup?
No.
Okay, we won't. And Navneet, if you're a fan, will Dhoni remain the T20 and ODI captain or will it be Kohli next
I
year?
don't watch cricket.
Hope so. Sunil?
I think Dhoni will be T20, though I think we might have a new captain on the one day side.
Okay.
Will he be Anushka Sharma's boyfriend?
It goes without saying.
We don't know whether he will remain.
Please stick by. That is something he cannot predict. Paytm or Flipkart, Sunil, what would list first?
Flipkart.
Okay, and I asked this question to Sunil the last time, so I'll actually ask Navneet because he skipped the answer. Deepika Padukone, Kangana Ranaut, who will remain the #1 actress next year?
I don't watch movies as well.
Oh my God!
What does he do?
Seriously, Naren, your choice.
So
Deepika
the
Padukone,
markets.
Kangana Ranaut.
I don't have a view.
Sunil, I'll come
He
back to you.
definitely has a view.
Yeah, because Deepika is his favorite actress.
No.
I didn't
But
know
I
that.
prefer, Kangana is a good actress, but Deepika, I think, looks better.
Okay, now we'll move to something that all three of you can answer. If you were to choose one space as the big dark horse from this Samvat to the next Samvat, we're getting back to the markets, what would it be? Naren, that one space which could be a dark horse,
Oil and gas.
and why so?
Because it's something which is down 60% in the last 1 year makes it a good contrarian bet. Because oil is not a investment cycle product, it's a consumption cycle product, and therefore it has lower risk of big drop. In fact, demand has gone up substantially, including in India and oil. That's the reason.
So you would essentially bet on upstream.
Yes.
You bet on upstream.
Navneet, the dark horse sector and why?
So maybe, chemicals could be a very big area going forward. Probably it has the same characteristics and similar drivers as pharma had several years back, but there are going to be lots of other niche consumption categories that can do very well. I think the smaller categories are becoming bigger. But maybe as a sector, in terms of sheer size, I think the industrials, the overall capital goods, engineering, construction, you add maybe some materials like cement, I think likely to do well. My view is that I think investment cycle will surprise on upside in next 5 years.
Okay, Sunil, same question to you.
Purely from a return perspective, I think utilities can be the dark horse because they're all available like a one-time book with interest rates coming down and predictability increasing. But high growth sector would be the branded business. So brands of all kinds. I think we are all getting fixated enamored by brands. Some by Audis and some like us by Toyotas of the world.
Oh, who are you looking at? Maybe Navneet, maybe Naren, or maybe Ayesha. Certainly not me. But okay.
I'm a JLR fan.
Okay.
They look the best and they're the best cars.
Okay. Purely from a stock market perspective, I'm a Maruti Suzuki fan. But let's just nail it down to the final thought from each of you. We are at about 8,000, 8,200, give or take a few hundred points, which means last Samvat to this Samvat, we've pretty much done nothing on the Nifty in terms of returns basis. This Samvat to next Samvat. Naren, I'll start off with you because you mentioned that you believe the markets could be higher. Would you bet on the markets being sub 9,000, above 9,000?
I think we bet on large caps versus mid caps.
Okay.
We bet on hybrid funds vis-a-vis equity fund for a 1 year and equity fund over hybrid fund for a 3 year.
No, but this is not a view answer. This is just whether you go right or wrong on a number. Naren, guess a number.
My gurus say don't forecast, and if I start forecasting, then I'm violating my gurus.
Okay, fair call.
Okay, fair call, Navneet. What is that one asset class which is going to give phenomenal returns in the next 1 year?
I think equity above 9,000 with mid and small caps outperforming.
Wow.
Okay.
He totally made up for the I don't like cricket, I don't like Bollywood answer.
Sunil, what would you do? And what are your thoughts? Yeah.
I think obviously I'm an equity fan, and for a reason. It's not that just because I'm managing equity money, I like equity. I think in a growing economy, equity will definitely do well. And as Naren said, last 1 year we have had a zero return. So maybe the next year we have to make returns for 2 years. So I would definitely say that we would definitely be over 9,000.
Okay, over 9,000, and a good way to actually make money from there is to invest in SIPs, SIP by SIP, go out, invest money in the markets. If you don't know how to do it yourself, trust these wise men. They're out here managing your money. But Naren, Navneet, Sunil, thank you so much, gentlemen, for joining in. Wish you all and your teams a very happy Diwali from all of us in the Tina family.
Same to all of you as well.
Yes, thank you so much. And well, that's the Diwali special show. Hope you liked watching it as much as we loved doing it. Thanks so much for watching.